Hey, what's going on, everybody? Jeremy back again with another video. Um, Today is actually Friday, February 24th, 2023. We're looking at one of the positions that I actually marked out. I believe it was day before yesterday, so the 22nd. This is actually Euro Pound, this market. So just to kind of go back, I believe I ended up looking at this originally on the 30 because I said, hey, that's kind of tight. It's small, can't really, see where that's going. So we went out to the 30-minute. I looked at this zone. I basically looked at this and said, okay, started from this level. And then after kind of, doing an eye test a little bit, I said, hey, you know what? The likelihood is it's going to take this high out, but there was a retracement. And as you can see on the 30-minute, it tapped into that retracement area and it is now pushing away. Again, let me stop and just say this is informational, educational purposes. I am not responsible for any money that you make or any money that you lose. So strictly just analysis. Take it with a grain of salt. Take it, leave it, whatever. I just like to develop and cultivate some content. So maybe somebody somewhere that is familiar with what I'm looking at, the way that I look at institutional order flow, excuse me, will understand the overall concept of what I'm talking about in terms of how this is mitigating and what it looks like. Because having said that, disclaimer out of the way, okay, don't sue me. Okay, so now we're done with that. Ideally, I should be looking at this low saying that this is my protected low, right? But I'm not doing that. I've actually just kind of refined that up. And it's still a little bit of a challenge because at the end of the day, if we're just, and I'm going to slide this all the way over so this is all you see, like right, where would that make sense? Like right here, okay? Well, actually, here. And this is one of the reasons why just taking your time and looking at the overall order flow. Not, we always are going to pick and choose like what we see and what makes sense. And the unfortunate side of that is everybody can be influenced emotionally into believing a bias. But when it is just strictly what the institutional order flow is, there's no emotion involved in it, and it's as simple as, you and it's so cliche because it is true. You just trade what you see. Now, the reason that I moved everything over and I said, okay, we're going to start from here, and then we'll just look at what this might appear to be. Someone would look at this initially and say, okay, well, that's a bullish structure, but guess what? It's bullish until you get here, and then what do you have here? It immediately goes bearish. But this is one of the reasons why I went all the way back here. I said, okay, there's my break above. Where did this break come from? I said, okay, well, it came from in here. So I'm even cutting my own throat, if you will, so to speak, on a 30-minute, because ideally I should have my stop below this level. You could call it cheating. You can call it whatever it is that you want. But this is the larger MB or market break here. This is the enter or the intermediary market break, which again still means that I should be down here. But I took essentially maybe the equivalent of what the 50 would be coming back, which was this black line. And as I said, not pat myself on the back going, aha, look, it hit this point. Because if anybody doubts this analysis, go back and watch the video from 2 days ago. I marked it out. I showed you. I said, hey, I actually set this limit order on that day. And I said, okay, I'll see you later. We'll see, how it turns out. And I've said countless times, even just within the 3 videos, I'm wrong a lot, like a lot. and the zones as I draw them, my 50% supply and demand zones, if they hold, great. If they don't hold, great. It just further illustrates that, again, third video in a row. Don't get mad at me. When you stick to a plan, you follow it regardless. If the plan shows that there is an edge that can be exploited and there is profitability in the edge, why would you change? Why? If your risk management is in place, you would be able to withstand, especially, well, let me go back. Let me backtrack for a second. If your risk management is in place, if you've done enough digging and research to understand that whatever your risk tolerance is, if it is 0.5%, 0.25%, 1/8%, whatever it is, that in and of itself, that combination of what your risk is per trade, plus your risk management strategy, plus your trading plan, those are going to be the instruments and the keys to you basically weathering a a 5 trade loss, 10 trades lost, whatever the number is that you could think in your head in a row, right? Because at the end of the day, it's whatever that is, and your risk to reward, or excuse me, your reward can be exponential in terms of what the risk is, right? Because if you're risking 1/8 of 1%, but the reward is, 4%, if you do the math, that's going to put you at, like, if it reaches that target, you're going to be somewhere in the neighborhood, I want to say, of like maybe 2.25% gain on the account, depending upon the size and whatnot. So point I'm making is, if you lose 8-10 trades in a row, and then you hit that 1/4 to 1/8%, well, guess what? The likelihood is you're still going to be profitable. So again, don't necessarily. Some people get caught up in what's like win percentage. Europeans, or in the UK they call it a strike rate. So if you've got a high strike rate or a high win percentage, is that does that manifest, or is it articulated across maybe your overall strategy as reflecting that it is profitable? Because you could have a high strike rate and not be profitable. A few years ago, I was somewhere between like a 70 some odd percent strike rate. Guess what? I wasn't profitable. It was literally like the Babe Ruth one off. I'm gonna call this one. I'm gonna knock it out of the park, and then because my risk management was poor, I could have one big win, but because I wasn't conscientious enough of, how many pips in a stop, again, looking at market structure and whatnot, like I had minimal idea, and I had no concept of, well, you just hit this 1 to 5. Hey, that's great. But, you hit that 1 to 5, but then the next trade that you thought was going to run 1 to 5, well, guess what? That 1% was the equivalent of the previous win plus maybe 2 more%. So always on the wrong side. So, so far this trade moving along pretty decently, pretty well. However, I will even say, looking at it, I'm not going to change anything. I'm going to keep the bias. I think once the market does open Sunday, just again, looking at the overall structure and how price is delivering, this is actually setting up anybody that studied any level of Wyckoff. It's possible. I mean, obviously, there's several different schematics just within this schematic. So if I were to take this and go all the way down to like maybe say a 10-second or a 5-second, I would dare to even venture, like, you've got hundreds of, and I might be over a little bit, but there are all types of schematics in here, and primarily I could see, a distribution, a redistribution, another redistribution into an accumulation, into another accumulation, into another accumulation, distribution, accumulation, reaccumulate, like so on and so forth. Like you get the idea, right? So the overall structure certainly looks like it could be panning out to be an overall accumulation, which Sunday may show price bullish into this area, which is obviously inefficient delivery, which could also cause, again, as you scale this down, you've got maybe hundreds of little intermediary and short-term Wyckoffs. Well, guess what you have here on the 30-minute? It's the same thing. It is what's referred to, and I can't take credit for this term. My mentor, Anton, or MentFX, was the first place and the first person I ever heard reply to this replication of price delivery on multiple time frames and multiple areas as a snowflake. So, it is his terminology, something that, I had to study, watch, and realize, that is, yeah, it's pretty cool. It replicates, but within each snowflake, they are not, no two snowflakes can be, well, they can be, but no two snowflakes are typically the same, right? There's always going to be a variant or a difference or a nuance difference in the repetition of the overall snowflake. If that if that makes sense to you, if you understand that. So what I would be looking at again, market open Sunday, potentially a continued mitigation here. If it breaks out of this demand zone, I still expect price to mitigate here, and quite possibly it could push all the way back down, and it could sweep these lows. It could take me right out. It could stay within the confines of this demand zone, but still take me out, sweep the low, and then continue higher. Because once it comes up and mitigates here, and this is just based on my bias, this is not me saying this is exactly what's going to happen, but the likelihood is, again, you have to remember, it's coming from, all of this mitigation is coming from an overall bullish context. So that being said, you're going to have some bearish momentum and bearish action, because mitigation in this perspective, in this respect, mitigation cannot take place unless there are shorts, unless there is bearish intent, right? It's like you can't have one without the other. There's no mitigation in the context, the overall context of a bullish market. There has to be bearish consent in this overall move, which brings you back into here. So again, this would have been the refinement for me. It tapped into the refinement. It does not mean, however, that the refinement cannot be swept and in a continuation. So, again, just so we're kind of clear, I'll put a couple of arrows on here so you get an idea of what I am. Well, I'll use arrows for here. So we could actually get this move here, and then I'm trying to. It's not cooperating. And then we could get something like this, like I said, which would sweep, could potentially sweep the low, and then continue long, like in whatever the delivery is, right? I'm not suggesting it's just going to shoot right up here, but you get the idea. It could sweep this low and then continue up, tap into this area. So this might actually hold the structure down, and it may range in here for a while before actually popping back up, taking out that high. But it could do any number of things, right? Any number. It could come up, it could take out a lot of the inefficient delivery price here. It could push back into the demand zone. It could basically just continue to create interterm liquidity and mitigate until it either breaks up and out, or it shorts, it sweeps, it comes back, it retests, and then it runs short. Again, my bias is going to be based upon bullish intent, previous bullish intent, a break above, a test, a short, a mitigation in this area, and then a takeout of this high. So again, That's what I would be looking for going into this Sunday. Let's take a look at USD and then the British Real. British. Wow, I said British. The Brazilian Real. Excuse me. Such a Deutsche Bank. I'm a Deutsche. All right. So we marked this out, and honestly, nothing happened. This is kind of indicative of the same thing I just finished talking about. Um, does it push back into this area or no? So a lot of people would look at this. I personally would have looked at this a long time ago. Well, not a long time ago. I would have looked at this 2.5, 3 years ago, and I would have believed and been drinking the Kool-Aid that this is not tradable. And technically, it's not. This is, again, my mentor would call it fluff. It's intermediary, and unless you have a strong enough understanding of the concept of what's occurring, where it is potentially showing you that price is wanting to go, not to complete the move in here, because all of the intermediary is not to complete moves, it's to set them up. Okay, if there's nothing else that I've learned over the last year and a half, is that when you're looking at any kind of intermediary price action, you do have to be careful unless you're looking at it from an overall context. So for me, I would look at this market and say my overall context is bearish, and let's see. This is ultimately where I derived that from. You're looking at a short, a break, short. This is the low. It's coming back up to retest within this area, and I've maintained that. So actually, again, this line is basically going to be my point of invalidation. I've seen where it's been tested. There's a sweep here. This was a touch again. So in my mind, I would say, okay, down here, this is the ultimate TP. That would be my ultimate profit level. However, short term, I would be looking for this low to be taken out. Again, we're looking at the 30-minute. I'll stretch this out a little bit so you can see it. So yeah, we marked this same one up also 2 days ago. Yeah, intermediary price action, not a whole lot going on. So let's drop down to the 5-minute and see what we can see. And again, still kind of what we were looking at before. A lot of gaps in price here. So for me, just as I had previously stated when we looked at this, and I said, hey, there is obviously there is a clear direction. However, the way that price is mitigating within gaps, within areas, and not really filling the intermediary is not something that I would even want to touch. Even though I can look and see where price wants to go, there's nothing that really gives me an edge jumping in to anything in here, because we've got this gap. So, can my bias say, what's the likelihood of this running back long to tap in here or before going short, or the possibility of, coming back, filling this gap in? Because if you look at how price delivered, what did it do? It pushed down, and at some point price closed, and then when it opened, it gapped up. And you've got this one gap up within structure. This was kind of a sweep of structure from here. So again, I could form an intermediary or short-term bias just based on that, but that's not enough for me. So again, if nothing else that you've gotten out of 3 videos with me, it's pretty much the same thing. When I come to the markets now, I can look and see moves that I've had in place, or positions that I've already had, or positions that I've established, and I don't force anything. And if it doesn't show that it's wanting to deliver, or it looks like it's going to take more than the time that I've allocated for a trade to complete certain intermediary mitigations or liquidity grabs, then the likelihood is it just depends on the account. I may just close the trade and close that position altogether, even though it's, it might be a limit or a sell stop or whatever have you. But in my mind, I would say, you know what? I'll take all my risk off the table. I'll take my ball home because, the scarcity mindset will tell you when you set something. And if you notice, I just set this in terms of a concept or an idea. This is my overall, this would be my bias that, hey, price at some point is going to tap in here. It's going to run short, right? But what will tend to happen is somebody will look at this area and they'll say, okay, it broke, they pushed down, it broke. Well, this clearly liquidated this. So let's see, that's a high, that's a lower high, that's a lower low. Hey, guess what? I can just trade this short. Well, guess what? You probably can. And that's why I point out this area. You probably can trade it short to clear this inefficiency. Maybe. Or you trade it short, it comes down, and all it does is clear this level. Not down here. It clears the gap up, and it continues to run up. Now you're in a hell of amount of drawdown. So the moral to the story is, once you've found yourself in a zone, I would say that I'm dead smack in the center here, which means I know ultimately, or not know, let me rephrase that, so I apologize. My supposition is that price is going short from this. This is my minimum level of comfort taking a trade, and that's a 1.96 to 1. So guess what? It's not even a 2 to 1. Somebody would say, well, that's close enough. Well, it's not really close enough to me. I marked it out because, again, this is going to be the extreme of what I would need price to reach up into, to tap into, and either push off or tap, drop a little bit, come back up, mitigate, take out some more orders before continuing short. So, it's sometimes it's a lay and wait, or it's a sit and wait game. You could be looking at a setup saying that's going to set up and that's actually going to run. But here's a wonderful part about what we do. Unless you're the composite man, I'm not even going to say hedge funds and banks, but, well, I'll say this. If you're the composite man, if you're the Fed, or if you happen to, I don't know, run the International Monetary Fund, you may have an idea of when the bottom or the top is about to either fall or be broken through in such a smashing fashion that it's just best to stay out. Keep your bias, set your alerts, and go about your business, because the fact of the matter is, if you just allow this to play around and go on and on and on, maybe it does tap in, maybe it pushes a little bit, and it shorts you right out. It takes you right out. And then it continues in that given direction. Or you can just allow price to play out. Let it show you what it wants to do. And just understand, don't operate from a scarcity mindset. Operate from a place of abundance. There are so many instruments and so many markets out there that you can participate in, trading, whether it's the currency, whether it's indices, if it's commodities, whatever it is. The general idea and consensus is always going to be, just relax. Don't force anything, because there's always going to be an opportunity somewhere. You just have to sometimes be patient and wait. So that's it for today. I will put some things together. I know I did tell you that in the next video I would share with you guys the one market that I believe everybody is sleeping on. So I'm actually going to save that video until tomorrow, and then start getting videos uploaded, because these first three I've just kept private and archived, because the last video I probably want to chop it up a little bit, and I need to get down on my times. But we'll see how it goes, see how they play out. But anyway, you guys have a good evening, and I'll see you tomorrow. Thanks. Bye.